Awkward Insurance, you crazy people, you. I am Dustin Bryant, your struggle bus host today, and Kat is the host that is going to pull it all together for us today. Hey, Kat, how are you?
That's a lot of pressure to put it all together today because, I was just saying to Mac that I threw my back out this week and I'm feeling old and creaky.
Well, you're just going to have to deal with the pressure because I just almost summoned emergency services by trying to power down my cell phone today. So it's truly a struggle bus day for me.
It is Friday.
Yes, it is Friday. I'm so glad it's Friday. So I am so thrilled about the voice that you just heard. He is our guest. We have not talked before today other than passing messages through socials, but I am truly hopeful for the conversation that I think we can have today. And, we have a lot of fun with our guests, and I know we're going to have fun today. But Kat, you know how going into social media, at least for me when I was in my early 20s, it was all about getting signals that what we see on social media is really only half of the story of a person's life. And it's generally the best half of the person's story. And as much as we have fun on Awkward Insurance, and even in the opportunities that are afforded to us through our positions at the National Alliance, it wouldn't be fair to always be sunshine and rainbows. And today I'm just kind of relieved for the guests that we have, because it's been a day for me already, and it's not even really started. This Friday is more like a Monday, or maybe it's like a Sunday, and we're going into a Monday. I don't even really know. But I'm so glad to hang out with our guest today, because I feel like simply by virtually connecting with him and passing him in the virtual hallways of social media, I just know that our conversation with him is going to be one to help transform my day. So Jeff Shee has made a huge impression on me, and I'm so excited to announce that he is a guest on Awkward Insurance today. Welcome to Awkward Insurance, Jeff. How are you?
Thank you for having me, and there's no pressure with that intro at all.
I'm a high stakes kind of person. No, I'm just kidding. Actually, I'm a very low bar setter.
I'm so excited that Jeff is here, just to kind of piggyback. And Jeff, we will let you talk in just a moment, don't you? But kind of like you said, it's amazing that this is our first time talking, because I feel like I already know you. And maybe it was just because one of your Instagram posts, you were making dumplings. And you had that bamboo steamer, which just brought me back to my childhood, because I have not seen a bamboo steamer like that in so long. And I just went, is he a long lost cousin?
Kat, it's on Amazon. You can flash your metal Amazon card.
Well, welcome, Jeff.
Yeah, welcome so much. So Jeff is the CEO of QuoteHound and co-founder of Quantum Assurance International. He is, as they say in the South, I'm going to bring in my euphemisms. Let's see if I get them right. My husband makes fun of me all the time. He is dug in like a tick into InsurTech. Is that Southern enough?
That's Southern.
But what I find truly impressive about Jeff is the way that he represents himself on social media and rising professionals in the insurance industry. Anytime I've heard him speak, which right now has typically only been on social media, but it's truly humbling to see the way that Jeff presents himself. Jeff, I want to give you a moment to just introduce yourself and what you're about.
Where do I begin? So 2011, I got in the industry. And before I got in the industry, it wasn't an easy ride into the industry. So 2005, I was in the car business. I had another business before that. So I had my own shop. It was a car performance shop, similar to Fast and Furious. If you guys ever watch Fast and Furious, I was there before the Fast and Furious.
What version of Fast and Furious are we on right now? Is it like 22?
22, probably.
Yeah.
I mean, that is like the franchise that keeps on giving.
Yeah. And, it was fun when I first started, but the industry wasn't evolving to maturity. And I just didn't want to be in it no more. Like, we had a couple break-ins to our shop. People stole things of value less than $100. And the damage that was to our shop was like thousands and thousands. So I just got tired of it. I got out of the industry. I got in the car business. And when I got in the car business, my goal was walking in to make $70,000, right? Because I never made 50 before. Even though I had my own business, but it was such a grind. It was so tough. It was cutthroat. We would keep on putting the money back in the business and not paying ourselves. So anyways, when I got the car business, my goal was shooting for 70. And my first year, I made 114. Second year, I made 180. And, I was just like natural at what I did was because I put in the work ethics,
Mhm.
right? And I remember one day my finance director gave me a call. I answered my phone in my office and he was like, "What do you want to do? Do you want to be in this car business for 20 years?" I was like, "I'm making good money, more than I have ever made." And he was like, "If I was you, I was your age, I would look at 3 industries: mortgage, real estate, or insurance."
Mm.
And I was like, "Why, Mr. Lee?" Because at the time, Mr. Lee is Korean and I'm Chinese, right? And he see me as a young version of him, working really hard and just putting in a lot of hours. And he just started crying. I was like, "What is happening?" And then he was like, "I have 3 sons. I did not watch them grow up because I'm sitting here with you working 14-hour days." In the car business, most of us work from 9 to 9 and 6 days a week. And we don't really get out of the office at 9. We get out of the office at 10, 11, and we go drink somewhere to wind down. And then we go home to our family. But he was like, "For 20 years, I have sons who are very successful. I miss their entire life." And that was how I got in the insurance industry. And I was like, I want a family. I do not want to go through that. Because my dad delivered Chinese food. My mom worked minimum wage. And, we grew up poor and they were never around, right? Like I grew up making a living cooking noodles and dumplings for myself. So that was like a changing moment. And, I started applying everywhere. And I remember applying for State Farm. There were 3 interviews and then they told me no because I had a short sale on my record because 2008, everybody went through the short sale period and I bought a
Oh,
house that just
guilty.
way over leveraged. And, applied nationwide, never got a call, applied at Progressive, 1 interview over the phone. They were like, "Go be a captive agent for a couple of years and then come back apply." And then applied at Allstate and they were like, "You got a post? You got 100,000 in your saving account? Yes, come on in." So I'm so thankful for that call because Dwayne Crupper, shout out to Dwayne, he's now over at Farmer, because sometimes a chance, just someone's opinion, right? And I was really like sad about the whole experience I had. I was like, is it because I'm a minority? Is because I'm not from the insurance industry, where insurance industry seemed like a generational thing. Dad passed on to son, son passed on to daughters, right? Where it's like I'm an outsider looking in. And the theme of this podcast could literally just be an outsider because I never really felt like I belong, right? So I always trying to figure out a way that how do I belong in this little club that my finance director was crying, telling me to get into. And he said to me, he was like, I see everyone's credit application when they buy a car. I've seen the Nationwide guys, I've seen the State Farm guys, I've seen the Allstate guys, I've seen the independent guys. I've seen tons of realtors, tons of mortgage people. But real estate and mortgage, they come and go by seasonal, some hot seasons, some down seasons. But insurance is always steady. Stay in it, work your ass off for 7 years, and then you can play golf after year number 7. And I took that to heart. I was like, man, if one day, if I ever want to learn how to play golf, I need to get into insurance, right? So later on, I got a chance and I remember building on my first agency, 2011. My first 2 employees are still with me till this day. And I know doesn't hate the word employees, right? But a lot of agents, that's just how they, relate, right? Like the first person who believe in you, who want to say, "Hey, I am your employee by definition, and I want to come work for you." 001 and 002, they're still with me until this day. Both of them took a pay cut. Both of them are people I know personally. And one of them was my ex-wife.
I call those your first 2 supporters.
First 2 supporters.
There you go.
Your first 2 supporters. You're right. I don't like the word employee. I prefer team members, but in this doesn't even sound, I mean, team members, yes, but these sound like your first 001 and 002 supporters.
Yeah.
Can I just say, one of the things that I'm loving about your origin story, Jeff, is one of the things that Dustin and I were really appreciating about you, again, through our social media stalking or whatever, because again, it feels like we've already known you.
Have I turned you into a stalker cat?
Well, yeah.
Okay.
I mean, I've had experience stalking because I'm a former underwriter. That's what we do.
This conversation's going in a different direction.
No, but one of the things that I think we really appreciate about you is so much of what we see in the industry, especially with business owners, is we're living in this hustle and grind culture. And everything is about the grind. And you gotta, I mean, you know, all the cliches, but it's so refreshing to see that you put your personal life in the important position, you know, and you seem to really value your time with your family. And that is so refreshing because it's not something that you see, especially with a lot of, you know, male business owners in this industry. So it was just, I love that. I love that that was your push into getting into this industry.
You know, I think this may be like a comment for all the male podcast appearance guests, right? It's okay to talk about
Hold
the
on,
things.
hold on. Let me get out the pedestal so that you can step up and preach it for it, because I feel like this is going to be a good one.
I mean, it's okay, like, to support the people who put you on the spotlight, right? The people that help you get here, your spouse who make the same sacrifice as you do, if not more, right? Yesterday was my 4-year wedding anniversary with my wife, and you know what people don't understand is all these LinkedIn's, Twitters, and YouTube channel glorify these founders and these spouse who are putting all the work, taking on, you know, if I'm working 14 hours, right, that means who's watching my two crazy toddlers those 14 hours? You know what? I'm more tired on the weekend than I am tired working 14 hours on the weekdays because that is a job.
Those kids
right?
will wear you out.
Right. So, you know, so I just think like most people just come on here talk about, you know, their brand, you know, they believe their business is a brand. But if you look at LinkedIn, Steve Cook have twice more followers than Apple does on LinkedIn because people don't want to know about your work brand. They want to know your personal brand. They want to know why I'm following you, why I'm listening to this podcast, right? I'm not here to listen to an earning call. If I want to listen to an earning call, I listen to an Apple earning call.
So, Jeff, I appreciate the shout out that you give to your wife for all the work that she does in your family while you're working. But I want to back up a little bit. Did you say your ex-wife also still works for you?
There you go. Yep.
Very cool.
I told her I was going to open this insurance agency. I was like, if you know any salespeople, and she's like, how about I come? I'm like, what do you mean? And she was like, you know, you got to spend all your money, and I want to make sure that you succeed. So after our divorce, we became like much better friend than we were ever when we were married. You know, it's just like, you know, we had comfort level with each other. We know what push each other's button, right? After like, you know, 10 years together. And this other gentleman named Fernando who came on board, he was out of the automotive industry as well. You know, we were all working 12 hours and never spent time with our family. And if you look at all the industry with highest divorce, accountant, law enforcement, automotive dealerships, they all have one thing in common where you're always not home, right? You're always not home and you never get to spend quality time. And we succeed where we put our time in, we fail where we don't put our time in. And that's just a common thing. So, you know, we went from 2 people to 3 to 4 to 5 over the years and, you know, built up a $3 million book first run. Second run, built up a $4 million book in 2 years. You know, third run, you know, bought another book. That was 11 million, grew to 13 million. The fifth run opened another agency and grew 5.5 million in five months. So in the little short journey that I had, grew to $27 million in total premiums. And then my best year was the last 4 year where we did $10 million of new business with a 12% close rate and building a captive model. You know, I think, you know, what got us here to where we are today, it's really understand the 7 pillars of insurance success, you know, and I have my own little vision in my head of what 7 pillar of insurance success is.
So tell us what those 7 pillars are.
And I think a lot of them are the things that people talk about in podcasts and webinars and, online training platforms, right? And then there's some that people don't talk about. Process, for example, our last 3 years, we ran on a process where we had an employee handbook, right? Employee handbook, page number 1. Who are all your go-tos? Who do you call for this? Who do you call for that? Who do you call for this? What's your emergency number? What do you have this on file for you? 9:01 a.m. when you start on Monday, what do? Who you with? Who you sitting with? Who you mentoring with? Multiple people you'll be sitting with to shadow them. Multiple people you'll be sitting with to get tested on what you just learned today. We got that process down and it was all written, right? I am the least organized person, but I always hire around my weakness. I hire people who are opposite personality of me. I drive them fucking crazy. I'm serious. It's just my language. But
that's okay. That's what we have Mac for.
I think we have grown adults here, right? So, but I have vision, and I tell them, and they execute on a very detailed, smooth level, and we make great teams. So, the first 3 to 4 weeks, every single day, every single hour, we have their whole day planned out like calendar, like itinerary agendas. That's how we were able to scale from 20 people to 50 people in a short amount of time. And to get to 50 people, you probably had to go through 100 and 150 people in order to get there, because 1 out of 3 doesn't work out. And nowadays, I would say, the current environment is probably 1 out of 4. But back in the day, we're hiring a lot of people with 0 experience. So we had to follow everything to the teeth. So anyway, that's the first pillar, right? That's process. Second pillar is people. I don't think we need to talk much about that. There's a million episodes out there about people and culture. Culture comes before the people, because some people say people are important. I say, no, your culture is more important than your people. Because if you put your people over your culture, then we now have people who are taking power on having influence, whether it's good influence or toxic influence over your company.
It just takes one bad apple.
Yeah. And then the next one will be marketing and leads. So my view of marketing is a little bit different, and I use some of the bigger macro examples. People don't understand why Geico and Progressive spend $2 billion a year each in marketing, and they say, man, they must not love their money. Their loss ratio must suck. Their combined ratio must suck. But what they don't really understand is, unless you build a mega shop, unless you scale, you don't understand your biggest expenses in payroll, right? Like when I sit here and I talk to agents every single day, because Coolhound's a lead company, right? Coolhound's a lead company, and we sell leads from our exchange. And
I'm going to interrupt you for a moment, because
sure.
I want you to put a pin on that, because I'm really interested to hear how you pivoted from the retail agency into Coolhound. So I'm going to let you go there, but keep talking about those pillars.
So, the marketing piece is so important, because I would see somebody put up $40,000, $50,000 just to hire an employee, right? And then they give them away commissions and they give away renewals, but they're not willing to buy them leads. I'm like, this is like ludicrous thinking to me, right? Because sometimes your employee's ability to succeed for the first 30, 60, 90 days is how much money they take home on their paychecks. You can't expect employee to have an employer mindset, right? They didn't come in with their name on the door, even though you hope everyone who you hire want to take pride with their name on the door. But at the end of the day, they come here, their expectations make $1 and make more dollar than they expect, right? So I find it crazy that companies, from mom and pop companies to massive companies, that doesn't spend massive marketing dollars. And if you look at Geico call centers and Progressive call center, or even USA, these people who have mastered the call center model, their salespeople is on the phone 6 to 6.5 hours, right? And I talk to agents about buying leads. I'm like, so what do you do for marketing? They're like, oh, I download this cold list, this age leads. I'm like, how much fun would it be to work for you? I could just sit there and telemarket for 5 hours and call 500 leads
I don't even
That's
like
just going
calling
through
any
my
of my
head.
friends unexpectedly. I can't imagine doing a cold call.
Yeah. What's funny is a lot of the owners, they hire people who listen to them, but they don't hire people who challenge them. They don't hire people who tell them, hey, maybe we shouldn't do things this way, right? So I think this business failed to inspire.
So how do you inspire?
Um,
That's what
how do I
okay.
inspire?
Let me
So what's
let
funny?
me I was gonna ask the same, but I was gonna give a little bit more lead than just how do you inspire?
Sorry, I'm very direct.
Yeah, very, very direct. No, and that's a hard question, or that's a hard question to answer sometimes when you're not expecting it. I think I've been asked, what inspires you once? And I was like, dang. If you would have not asked me, I probably could have told you. But no, you've said it several times that the industry failed to inspire, and the numbers and everything. The talk is great when you're to that point, but when you're a new entrant into the insurance industry, any insurance or any industry for that matter, particularly in the role of building a business, the language around and it happens a lot here in the industry here in the insurance industry because we got a lot of hype men that we need new folks in the industry. In order to do that, we got to hype it up, we got to make it fresh, we got to make it inspirational, if you will. So there's a ton of how to build a $10 million book of business, how to build a six-figure salary, how to have a six-figure salary. It's kind of like it happens so often, it's almost like being on social media or getting those robocalls or seeing it on TV where it's like, would you like to have seven figures in your income or in your bank account within 24 hours? It's you either get jaded by it and you start to roll your eyes, or you're like, oh my gosh, the insurance industry sounded fun, but dang, if that's the goal, is to immediately get to this $10 million, it's a big bite to chew. It's a big chunk to chew. So there does have to be a level of inspiration in the beginning in order to even feel like you're capable of reaching that goal. So then again, here we ask, how do you inspire?
I think we get caught up. We get caught up in that next claim call, the last sales call. So and so machine broke. Like, I don't know. Like, I still hear people talk about like fax machine breaks. I'm like, we're in 2022. There should be zero fax machine in anybody's office by now, right?
But there's so much fun. It's so fulfilling to type in the numbers and hear the beep and put the paper in and see it get sucked through the machine and spit back out the other side. And then you hear the and it connects and then it says success. And it's like, yay, a little mini celebration on a fax machine.
We should do a social media post. Is post your picture of your fax machine from your office, hashtag awkward insurance.
Yes, on it, done.
All right. So the next two pillar that outside of the thing I just mentioned is cash flow and cash reserve. We know there's Live Oak out there, but Live Oak is like, they're so big, right? They're like, if you don't have a $2 million revenue book you're buying, we're not interested in talking to you, because they're just bombarded with all the big deal. There's so much merger and acquisitions. But you know what? There's like 80,000 mom and pop agency out there. Who wants their business, right? There got to be a niche for them. There got to be lenders, say, stepping inside, whether it's SBA lenders, right? Or private money, right? Hedge funds, P money, whatever that is. And that just want to lend on those little mom and pop books. But the risk is significantly higher, so I understand. So, they should build underwriting, all the underwriters in this room, around those higher risks, right? But at the end of the day, cash flow and cash reserve. And I can even go in a third part called cash float, where the money come in, where the money come out, and how fast the money swing back around. It's the float part, right? Let's digest on the float. Cash flow is, really look at your business like a business, where Robert Kiyosaki have a little book called Cash Flow Quadrant, amazing book. Insurance agency owner should look at their business and look at themselves as an expense. I hear agency owner like, oh yeah, I got 3 salespeople. I'm like, okay, who's your service person? Oh, I service the book. I don't have any CSR expense. I'm like, you're wrong. What do you pay yourself? 90 grand? Okay. 80 grand? Okay. Your CSR cost is 80 grand for billings and sit on the phone and talking to a claim person and sit on the phone for 2 hours. You are the worst manager at managing your business. If any agency owner tell me, I am the CSR. I enjoy talking to Joanne because she's been with me for 30 years and we talk about cookies and lemonades. I'm like, well, you can have a CSR person who's really lovely talking to Joanne for 2 hours.
Yeah,
People
I'm
fail at this.
shocked that there'd be an agency owners not having CSRs. That's just really fascinating to me. How do they do that?
There's a gentleman, I think Ryan Matheson, posted on LinkedIn yesterday about how many percentage, like 60% of agency owners still have hybrid roles where they don't separate sales and service, right? They think hiring is innovative by having salespeople managing their own books and pay them 2% renewals. That's not innovation. That's holding your best salespeople back and not a horrible use of the time and horrible spend of their salary to scale your business.
I
And
agree with you on that. I saw that post. I commented on that post because my perspective, ton of podcasts about producers out there, and you're doing a wonderful job in that area. But I love to speak from the account manager perspective because as much as I love insurance sales, I love supporting my producers a whole lot more. I love being that role for somebody. That's just who I am. And the
yeah,
Glove Box app, I love it because as an account
yeah.
manager, I've seen it and I've
Is this a shout out?
yeah. Hashtag glove box. Anyways, yeah. From my perspective, what I know is being a support person. So yeah, it dumbfounds me that anybody thinks that they can run an agency without a CSR or somebody to support their producer that way. Because I just the way I grew up in insurance apparently was the right way, where the producers are outside doing their thing. And we're here supporting you, but we can also drive the sales on the inside as well so that you just focus on those relationships and bringing them in kind of thing. But this app, the InsurTech, the whatever, not adopting the InsurTech bogs me down as an account manager with the mundane stuff where I could be focusing on developing those relationships, getting those in-house referrals so that my producer doesn't have to. Of course, I'm going to be like, yo, producer Joe, I just got a wonderful referral from this client, whatever, shout out to him to let him know that he's doing a great job of being a mouthpiece for positivity for us, But as an account manager, as much as I love talking about billing, I could really leave it. I could really do without the $10 conversations. Okay. So adopting the InsurTech, I want to slide that in there from the account manager's perspective on that InsurTech piece, that it's not just releasing your producers from the service role, but it's also releasing your service roles from the tiny services where they could be of so much more value in such bigger ways. As well. So
You guys ready for some prediction time?
Prediction.
In the next 2 years, I think a new InsurTech trend, right? We saw InsurTech 1.0, the Roost, the Metro Mile, the Lemonade, that say, we're here to replace the agents. And that's like failing miserably, right? Because their CAC is so high.
Amen.
The InsurTech 2.0, where you have Coterie, you have Branch, you have all these companies out there who are beating the drum that we are working with agents openly. I love their message. Shout out to Ty. I don't even know Ty, but shout out to Ty. Like, their message very clear. We're here to work with agents.
I don't know
right?
Ty either, but shout out.
shout out to my boys, David McFarland at Coterie, Steve Lackas, and Tim, and all these guys. I mean, I had a chance to hang out with Dave and Joe Emerson at one of the mastermind of InsurTech that we put together last month. And those are sharp people. While I was hanging out with them, I was just like, man, these legacy carriers, these regional super carriers, they're in trouble because these guys are sharp. They know what the problem is. They've been into these regional carriers and super legacy carriers, and they're ready to change those problems. But anyways, I don't want to get off topic. We can have a separate episode to talk about that trip.
I would like to hear though, like what kind of InsurTechs, do you think this InsurTech 2.0?
Yeah.
What's going to benefit your agencies best?
Two part has to change, and that had to do with cash flow. and that have to do with cash reserve. For, let's just say Dustin, she want to build her agency in Arkansas, right? If you look at some of the company, and I'm just throwing big names out there, right? Firefly, Keystone, SIA, and then the newcomers, the WeWork, the Brightway, the Goosehead. The newcomers was like, hey, we're gonna do your service work, right? We're gonna do your service work for you. Versus the old guys who are just aggregators. Aggregators, clusters, and network, they've been around forever. Have they changed their business model in the last 50 years? And the answer is no. There's just new people coming around with flashier logos, cooler names, whether they call Duck or Ducky or Quickie or whatever they are.
Quack,
It's
quack.
just another little, cover, but it's the same cat, right? It's the same cat, but with different necktie or jacket on the cat. But so many insurance agents coming to this industry with their life savings, and they leaving six-figure job to build a dream. We take that dream for granted. And I'm speaking to all the clusters, the network, and I am a stalker just like Kat. I go on LinkedIn. I look through structure of an organization, whether your cluster, your agency network. And I see these people who are in the agency success role, which means they work with agency owner who have no experience coming on board, giving you a buy-in, whether it's 20,000, 30,000, 50,000. And they're like, okay, I'm gonna give you money and I want you to change my business model, succeed. Like, nobody really understands the failure rate of these clusters, of these agents come on board are like 80% plus that don't make it to year number 4. After first year, second year, their money's done, like what they brought to the table, and they just barely hang on a thread. And then they have these clause of buyout clause of 30%, 40%. Some are really predatory. And then the newcomers, the Brightway, the Goosehead, the We Insure, the Great Florida, the list go on, right? The Quantum of the world, they come in there, kick their ass, is because they are finding a new way to do things with a new flow of, you focus on sales, we're going to do your service, we're going to provide the care line within a week, within 2 weeks. But I think there's one more that's coming. And, when I co-founded Quantum, and one thing we did was, a lot of people don't talk about this, like the hidden thing in the room is overrides. Insurance carrier, see, if you can perform, they will give you overrides, right? Whether you're standard commission 10%, 12%, 15%. A lot of people don't understand there's like multiple level of standard commissions between carrier. And on top of those multiple level, there's overrides between 2 points, 3 points, 5 points, 7, 8 points, right? These clusters and networks are, and also the franchises are holding those back. By them holding back that money, they're getting the profit, but they're making 20% more on a dollar versus giving the overrides to the agents, right? Allow them to get a performance at 18%, 17% on new business versus 12%. You can help a business survive longer, and they can scale even faster by taking home more money. So we should start focusing on the concept, how do we not make 20% on $5? How do we make 1% on $20? How do we make 1% on $50? How do we make 1% on $1,000? Right? That should be the new focus. And also renewals. Like, a lot of people don't understand, like, standard renew could be 15, but these massive network, they could have 18% renew, 19% renew, but they're holding all that money back from the agents. When they're holding that money back from the agents, they're stopping the scalability of that agency. That's why, like, you see some of these networks, they're like, no, we have 9,000 agents and we have $10 billion premiums. And then you do the math, you're like, wait a minute, that's $1.1 million premium per agency. That sucks. What is that after revenue? That's 110,000, 120,000, 130,000 revenue per agency. What is that after one CSR expense at the fixed variable cost that we talked about? What is that after 2 salespeople expense? There's no more money left.
Oh, my goodness. That's a lot. Listeners, you're really going to need to do some homework for this episode. Hey, this has honestly been a very mathematically, he's got his He's got his gun fingers out. It's been a mathematically nerdy conversation with you today, Jeff.
I want to thank you. I love how, again, like I said in the beginning, one of the things that Dustin and I really appreciate about you is despite your entrepreneurship and despite having these businesses that you have going on, you have a bigger why, a greater mission that goes beyond just that material wealth. And that's really beautiful.
I have truly enjoyed the conversation with you too, Jeff. It's just, I'm going to reiterate what Kat said, and all of the drive that you have to be the best that you can be in your entrepreneurship. The way you present yourself is very clear on what your ultimate mission is. And your kids are going to grow up and be so proud of everything that you have done and the examples that you've set for them. And I absolutely thank you for the conversation today.
Yeah, thanks for having me on.
Thanks for hanging around for another awkward conversation in insurance.
Stay tuned for new episodes from Awkward Insurance wherever you listen to your podcasts. And be sure to check out the National Alliance on Facebook, Twitter, LinkedIn, or at scic.com.
Now go forth and be awkward.
Toodles!
Toodles!